Everything up for the day on the last trading day of 2018. Happy New Year. Our book is available. If you purchase the book here on the last day of the year, all the way through, we'll actually be republishing the quarterly review for everybody who purchases it both on the 31st and the first day of the new year. If you want our quarterly review, buy the book or go and become a patron sponsor. All of those lists will be getting our special quarterly review. You'll see links to the Patreon page and how to buy the book in the show notes, whether you're listening to our daily review that we email out to our subscribers. Urge you to subscribe. That's for free. Also, if you're listening on iTunes, on any kind of podcast, or if you're listening and watching on our Charting Wealth page on YouTube, you can also look in all those show notes. You'll see links. Now, let's talk about the quarterly chart that we're going to be reviewing for you. Those of you who don't know about it, if you do nothing but tune in once a quarter to what we do here at chartingwealth.com, it can be worth its weight in gold for you so that you learn how to use this quarterly chart. We're not a stock calling service. We're an education firm. But I tell you, the magic of the quarterly chart we have discovered on the S&P 500 going back, let's go back to 2004. About 2004 at the end of the year, going into 2005, jumping in the market then when our quarterly chart crossed over on the price percent oscillator would have gotten you into the run-up. And then when things started going south, would have gotten you out at the mid-year around June the 30th, when things dropped off in 2008 through 2009, would have gotten you back into the market around the 31st of December, so January 2011, for the huge run-up. And of course, we had the Trump effect that took place, fascinating to pay attention to and see, and would have had you in on this latest run-up. And of course, a hiccup could be occurring, and that's what we'll be talking about on our fourth quarter review for 2018. You want to get all of this training and the stuff that we talk about once a quarter. It's easy to do. Become a Patreon supporter. We'd very much appreciate your help. Also, we're offering it to the folks who've purchased our books. We've got that list. If you hadn't purchased the book yet, do that too. But if you want all the special trainings, be a Patreon supporter. Follow those links to Charting Wealth's Patreon page. Just a few dollars a month helps us out immensely. You can imagine how expensive this has been to do for you over the last many years. We provide our daily training every day for free, along with all the other training that we do. And again, the book is about the only thing we've been selling, and we've been asking for Patreon sponsors. So help us out at the beginning of 2018. End of 2018, beginning of 2019. We would so much appreciate your help. Enough selling. Let's jump into the market. How did things go on Monday, the last day of the year? Things were up a little bit, 0.96%. Well, that's a decent up day, actually, for the S&P 500, up 0.86% for the NASDAQ 100, up 0.37% for 20-year bonds, and up 0.14% for gold. Now, let's check out what's going on. We have a green candle forming. Again, first green candle we've seen in 3 weeks. And that was really a green spinning top sliding sideways this so far first day of the shortened trading week, because, of course, the market will be closed on New Year's Day, open again on the first trading day of the year, which will be the 2nd of January. So what do we see going on? So far, green up candle. Now again, it's a solid green. It's not a super strong up candle, which is always going to be a green open box candle with a wick of some size on top. So again, this is a weak candle that's forming, but forming nonetheless. Derivative oscillator losing downward momentum. Price percent oscillator still heading down, not as strongly as it had been the week before or the week before that, where it was heading down even stronger. But again, we'll just continue to watch and see what we see. This is what we've been hoping for. What do we see going on the 2-day chart? Well, Well, what we see happening there is the last candle finished forming on Friday the 28th. And of course, this is the first day of the latest 2-day candle. So far, shaping up to be a strong up candle so far. It's only half drawn. Derivative oscillator losing downward momentum has been since it peaked going down. Would that be peaked? It troughed, I guess, going down on the 24th. And we see that the price percent oscillator is heading up, but still down, weekly still down. So again, still have opportunities with the down trends in the market for down plays. We have a pullback underway. What's happened is a reversal. Let's call it that. Somebody called me out on that last week. We have a reversal underway. And of course, we see things heading up where the weekly and the 2-day are still down. We are going into the first, second, third, fourth day of up movement. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. What we're waiting for, if there is going to be the potential for resumed down moves, is for everything to cross back over going down on the 4-hour chart. That'll be our trigger chart for jumping in to another down move on the S&P 500. How would we do that? Well, we would do a practice trade of SH, which is the ProShares 20. It's the ProShares short of the S&P 500. And again, when the S&P 500 goes up, as it has been the last few days, the inverse fund goes down. Well, when things revert back over, it will be going up. So we'll be looking on a potential trade in that. On that chart, or any of the other short charts that you, or any of the short funds that you would like on the S&P. There are many others. Let's look at the Qs. What is it doing? We start always on the weekly chart. And of course, we have a green spinning top at this point. Lots of indecision, tending up, but it's just the first day of a 5-day candle. Derivative oscillator losing momentum. Price percent oscillator still heading down. 2-day chart. We see that it has been sort of bottoming out all the way back on the 24th. That's the 2-day candle ending the 24th Monday of December, and things have been moving up since then. So we'll continue to watch derivative oscillator losing downward momentum, price percent oscillator heading up, but still in a confirmed down move. We see it most on the 4-hour chart. And again, things weakened a little bit at the end of the day. Derivative oscillator lost a little bit of momentum. Price percent oscillator still heading up. If we have a crossover going down, then of course that would give us, this would be the trigger chart, the 4-hour chart for jumping into a practice trade. One you can look at as far as an inverse fund, PSQ. That is the ProShares short of the Qs. It's the opposite. Now, you might look at the dollar amounts being less. Yes, it is. It costs less, but is supposed to move in the same percentage opposite of what's happening with the Qs. So if the Qs is going down, then PSQ is going up. So we'll wait and see if indeed we have things reverse and head back in the direction of the 2-day and the weekly charts. Hope I'm making sense there to all of you, particularly the new people. Don't understand what we're saying fully. Please take all the different trainings we have at the website, chartingwealth.com, and also buy the book. Okay, lastly, two more charts to go through. TLT 20-year bonds. Again, starting the week off going up and has been going up 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8 weeks, derivative oscillator gaining upward momentum, price percent oscillator heading up. We look at that 2-day chart. Again, a little worried about things peaking. Again, sort of sliding sideways. We can see since it really peaked back on the 20th as far as high dollar amounts went. So again, on that 2-day chart, just the first day of the latest 2-day candle, take a look at that 4-hour chart. What do we see? Again, concerns here. We rotated over all the way back on the morning of the 26th. We're waiting to see if things will cross back over going up. If they do, that could give you a jumping in point for a continued practice trade. So we're watching for that. So watch for that as we go throughout the course of the week. Back to the weekly chart. Lastly, we go to gold, up 0.14%. Gold's been going up now. This is going into the 5th week of up movement in gold. Derivative oscillator climbing, gaining momentum. Price percent oscillator heading up. 2-day chart shows us, again, things moving up. First day of this latest 2-day candle. Derivative oscillator gaining a little momentum. Price percent oscillator heading up. And that 4-hour chart just continues to move up. Derivative oscillator looks like it's flat, maybe gaining a little. Watch that price percent oscillator. It's slowing down quite a bit. So again, just be careful, pay attention. You've done quite well jumping in somewhere around the 118.60 mark. And again, going up to the high during the day, 121.26. That's quite nice. Let's just continue to watch things on gold and see how long we can sustain that practice trade. Be careful with things looking like they are on that price percent oscillator going flat. So pay attention when the market opens back on Wednesday morning to what's going on. Again, thank you so much for all your support this past year. I hope you like the quarterly training. As soon as we finish this one and upload it, we're working on that. We'll be getting that out to you on January the 1st. Those of you who aren't qualified to get it yet, go ahead, buy the book. Support us at Patreon as a Patreon supporter. Either one of those will get you in. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.